Nigeria's most recent Eurobond auction has raised $2.2 billion. Significant step in the nation's continuous efforts to reduce its widening fiscal imbalance. That's the subscription of $9 billion, 2.2 was what was allotted, $700 million, 6.5-year tranche at 9.625, 1.5 billion 10-year at 10.37. It's under the S-144A structure, meaning that U.S. investors and other international investors can get on that. There is, of course, some talk about the cost of this bond in terms of the rates. Let's talk to Efosa Aluyi, Head of Investments at Sankore Global Investments. Good morning to you, Efosa. Thank you so much for joining us this morning. What's your assessment of this, the foreign investor appetite for this bond?
Morning. Thanks for having me, Rotus. I think you had an order book that was essentially 4 times the offer size. So, that's reflective of, the positive reception and the, successful outing, if you will, for the federal government of Nigeria through the Debt Management Office. This is clearly reflective of the fact that you've got quite some funds out there that are still seeking, higher yields, that are still looking to pick up yields, even in regions that are termed to be somewhat riskier than investment grade. So if you look earlier on this year, as a matter of fact, you had a number of SSA sovereigns that also issued Eurobonds in the international capital market. And you had order books that were, multiples in excess of, the offer of the Eurobonds that they wanted to raise. So clearly, I think this was a successful outing, for the government. In terms of the cost, though, up until just before this offer, Nigeria had about 15.1 billion in Eurobonds, total Eurobonds in issue. If you look at the cost of that on average, it was about 7.6% per annum. So which means that we're paying about 1.1 billion in interest annually to service all of that. Now, with this 2.2 billion, we're now sitting at around, 17.3 billion thereabout. And, the cost of it has essentially gone up by about 32 basis points, which will now be 7.9%, averagely annually. So we're basically going to be expending about 1.3 billion in interest servicing, the new bucket of the Eurobonds that, that we have. So again, that just gives you a sense of what the cost is, from that perspective, really.
Wow, thanks. Okay, and thank you for mentioning the other sovereigns, because I guess a couple of them, one of them was Benin Republic. I think they did about 8% back in January. Also, the Ivory Coast, I think we got the data, we'll put it up there in a moment, but also the Ivory Coast, 2 bonds, what was it, 6 year and 9 years, so both at 6% each, right? If you comparing just those notable raises over in Africa compared to Nigeria, does that raise alarm bells?
Not really, right? So if you look at the Eurobond yields, particularly for Francophone African countries, Ivory Coast, Benin Republic, you would see that their yields are, much lower than for the Anglophone countries. And that's just on the back of the fact that, price stability in those countries really hinged to the euro. So their currency is very, very stable. Inflation there is really very low. And that is just reflective of, what you see in the market for them. So that's why a country like Cote d'Ivoire, for instance, could come to the market and raise the bonds at the price they did. And same thing for Benin Republic. So it essentially has to do with, local macros. And for them, those macros, particularly from a price stability standpoint, is hinged to what you have in the euro. So that just gives them that, significant support, really.
Now, the IMF has said, because here's the thing now, the talk around is that, listen, why didn't Nigeria consider going to the IMF for cheaper funding? In fact, we're in Washington, D.C. I got a chance to pose that question to Abebe Salisi, who is in the IMF's Africa department. Here's what he said about Nigeria approaching the IMF for funding.
There was a question about whether there's been a request for funding from the IMF. No, there has not been a request for funding from the IMF from Nigeria. But to just be very clear, this is also a question that has come up in the context of some other countries. If and when countries turn to us, we hope that they do so having a very clear plan of how they want, what kind of economic reforms they want to pursue. And turning to us would be a way to help reduce the funding costs that they face.
I mean, he just said it there to help them in reducing the funding costs. Where do you? I know this is a touchy issue for many people, but what do you make of it?
So those IMF loans they're largely conditional, and the negotiation process can be quite long drawn, right? It takes quite some time to get that done. So if you factor all of that in, and in certain situations, those conditions are probably not popular in terms of reforms that need to be implemented. So it becomes a challenge really accessing those loans. If you compare that to what you have in international capital market, I mean, look at this offer. Yes, there's been a lot of work in the background, but it took less than 2 weeks and we've got $2.2 billion. Yes, it's more expensive, but it's quicker. So that speed with which you can access these funds in the international capital market remains a really huge advantage over what you probably would get with the IMF.
Well, what about the argument that we've already undertaken some of those tough reforms? So there wouldn't, in terms of negotiations, well, you've already done the hard work.
I mean, I suppose, those negotiations could be in the works. It's like we've got our ducks in a row in terms of assessing those loans. So so the Ministry of Finance could certainly explore that as a matter of fact.
I want to ask you about, since we're talking about debt, let me ask you about equity now. In terms of the amount of assets that Nigeria is sitting on, as maybe I'll get your thoughts on the tax reform bills, because that's what's been making all the headlines. Well, Taiwo Oyedele, who is the head of the chair of the Presidential Committee on Fiscal Policy and Tax Reform. He had a presentation in front of Chief Financial Officers, tax and so on. Here's what he said about assets, the value of assets Nigeria is sitting on.
In addition to the tax leg, I told you that the revenue transformation has 4 subcomponents. One is tax. The second one is government assets. I was speaking to someone who heads a government agency yesterday, and the person told me, let me just even say it was somebody in the sports ministry. There's no ministry anymore now, it's commission. When the guy told me the kind of asset they have overnight, even me, I was surprised. The level of assets, from stadia to sports centers to something facility to games village, and these things are not generating revenue. So government assets, we think it will be in the region of 100 trillion naira. We even need to know what the assets are and where they are, and then what do we do with them? The ones we need to sell, because private sector can manage them better, we should sell them. The ones that government needs to manage, let's manage and sweat them and get like double-digit returns annually. From government assets alone, we can easily generate more than we're generating today from companies' income tax, personal income tax, and VAT combined.
Sounds bullish. I mean, but Egypt did do this. I mean, I think we had you on to talk. Yeah, we did have you on the show. Yeah, perfect. So we've come full circle. When Egypt was selling assets and the UAE was buying them. So what's your take? I mean, on this.
So I mean, clearly, first and foremost, we need to even clearly determine what those assets are, where they are.
Right.
We've got the Bureau of Public Enterprises, right, that is saddled with the responsibility of converting these government assets into private hands or even making them more efficient. A lot of these assets will probably even require quite some investment to make them viable. We also need to ascertain the viability of a lot of these assets. So the fact that some of them would require, quite some investment to make them viable actually does probably disincentivize people from taking them up. So there's a lot of work that still needs to happen. There's a lot that still needs to go on. There's absolutely no doubt about the fact that we sit upon these assets, but the process through which we then operationalize them, make them more efficient, such that they now generate significantly more revenue for government or sell them off, there's still a lot of work that needs to be done there. So it's not a quick win. It's not a low-hanging fruit.
Yeah, perfect. Now, I'm glad you gave me that answer. You said, this is why I love getting you on the show. But government policy, I want to ask you about policy. I'm going to take you to Hollywood now and then bring you home to Nigeria. So the Land Use Act, right? But first, Hollywood. There was this drama, what was it? The Founder, on the story of McDonald's, how McDonald's came to be. I want you to take a look at that clip when they talk about how Hollywood is just passing on information on the value of land and how McDonald's used real estate, it wasn't hamburgers, to essentially become profitable, and then the Land Use Act. So let's first have that clip from the Founder.
Burger business? You're in the real estate business. You don't build an empire off a 1.4% cut of a 15-cent hamburger. You build it by owning the land upon which that burger is cooked. What you ought to be doing is buying up plots of land then turning around and leasing said plots to franchisees who, as a condition of their deal, should be permitted to lease from you and you alone. This will provide you with two things. One, a steady upfront revenue stream. Money flows in before the first stake is in the ground. Two, greater capital for expansion, which in turn fuels further land acquisition, which in turn fuels further expansion, and so on, and so on. Land. That's where the money is.
But then there's a much bigger problem. It's the Land Use Act 1978. Honestly, if the Senate President really wants to help us, I think it's something that they need to look at, because it's arguably the one stumbling block that needs to be dealt with. And what does that do? Of course, it puts all power, control of land and property in the hands of the state governor. And then, of course, he can use that for overwhelming public good. But the problem is it has led to bureaucracy over the years, and it's rather inefficient. So it slows things down. You can't get funding in time. You can't plan properly.
Efosa, what are your thoughts on land, its potential in Nigeria, and I guess policy around it?
I mean, there's absolutely no doubt about, I mean, that's the one asset that essentially keeps up with inflation, right? You know, but I think, like the last speaker highlighted, there are challenges with, you know, the land situation in Nigeria, especially with the Land Use Act. So some of the administrative challenges, for instance, the process of obtaining a CFO, it's unbelievably tough, right? So there's, you know, and that then creates room for very little transparency. It then creates room for all kinds of issues, really, that, you know, bedevils that entire process, you know, at the end of the day. Another thing that you also have to look at is the fact that, you know, foreigners, for instance, aren't allowed to own land outright, you know, by that act, you know. So that, again, creates a bit of a challenge where, you know, foreign capital that would probably seek out land as an asset would not certainly come the way that it should. So if you were going to have $20 billion that would come here, maybe 5 would come and try to circumvent, you know, some of those things to be able to own, you know, some portions of the land. So these are some of the things that I think can be looked at. Again, if you look at it, you know, in the strict sense of it, land isn't easily convertible in this climb. You know, again, that speaks to the depth of our financial markets, right? You know, in you know, some other developed markets, you know, once you have land, it's almost like having that value in cash. Here, you know, it could take 2 years to get that cash. It could take quicker, it could take longer. You know, it's really not cast in stone. You know, but I think that the challenges that have to do with the Land Use Act need to be addressed. I mean, we need to have, you know, some kind of database of land such that you can go on a portal and see who owns what land, right? And when they had it, how it has exchanged hands over time. You know, these are issues that will ensure that, you know, there's better transparency. People are not prone to all kinds of, you know, risks when it comes to land in Nigeria. I think once those issues with the Land Use Act are addressed, I think it will free up, you know, the potential of land as an asset that essentially keeps up with inflation over time.
Efosa Aluyi, Head of Investments, Sankore Global Investments. Always a pleasure having you on the show, sir. Thank you so much for your time.
Thanks for having me.
Really appreciate it.